When you buy this Dividend stock that currently is about $30, you'll instantly become a part owner of 5 Universal Studio theme parks in Hollywood, Orlando, Japan, Singapore, and China. Well, amigos, the fun doesn't stop there, as a few of the other assets that you'll now own are DreamWorks Animation Studios, Universal Pictures, Europe's largest media company, Sky Group, US cable, internet, telephone, and wireless provider Xfinity, Fandango, which owns Rotten Tomatoes and Movies.com, Focus Features and Amblin Entertainment, the professional hockey team Philadelphia Flyers and their mascot Gritty, the Wells Fargo Center, which is home to those 76ers and Philadelphia Flyers, the ECHL minor league hockey team, the Maine Mariners, the Philadelphia Wings pro lacrosse team, Philadelphia Fusion esports team, Peacock Streaming, internet TV channel Zumo, also a split ownership with Disney of the streaming platform Hulu, NBC Network's TV stations across the United States, and NBC Universal. Hey, what's up? I'm Russ, and here on Dapper Dividends, we're all about making money primarily through dividend growth investing. And I just had some more of my money make money by buying Comcast, ticker CMCSA. So I did this in the taxable account by selling off Warner Brothers Discovery, ticker WBD, which was a recent spinoff from AT&T, and they have just a little bit too much debt for my liking, which is currently at about $51 billion. They only have about $2.5 billion of cash on hand, and they do not pay a dividend. I think the entertainment media business is really highly competitive, and I just don't like that WBD has all that debt. So in my mind, what I did was I converted those WBD shares into shares of Comcast. And I used that sale of Warner Brothers Discovery for an early tax loss harvest where I can offset the $354.54 of realized loss to lower my taxable income for 2022. In a nutshell, what you're doing with tax loss harvesting is you're selling stocks at a loss, and then up to $3,000, you can offset your taxable income. But the only catch is you cannot buy the exact same thing you sold for 31 days, or else that would violate the wash rule. Now, Morningstar gives Comcast a 5-star wide moat rating and a fair value of $60, which is currently almost 50% below their current share price. Year to date, Comcast has a total return of negative 38% to the S&P 500's negative 22% as of this recording. Checking in with Simply Safe Dividends, we're going to run through a couple quick metrics here. They do get a dividend safety score of 89, which is very safe. Current yield of 3.48%, so I really do like that. They've grown that dividend very quickly the last 10 years with a 16% CAGR, and their last growth was January of 2022, which was 8%. So coming up here in the new year, they should be increasing that dividend once again. And they do have 13 years dividend growth streak. Comcast is currently paying $1.08 per share per year, which is good for 27 cents per share per quarter, and that's paid every January, April, July, and October. Now check this out. Their dividend yield currently is 72% above their 5-year average, and that PE is only 8.4, so you're paying $8.40 for every $1 of Comcast's earnings, which you can see is well below their 5-year average of 14.2. And like a lot of stocks, they are at the low end of their 52-week price range. Couple metrics here to look at: their free cash flow payout ratio, which I love to look at over the earnings per share ratio because that can be financially engineered. 32% free cash flow payout ratio. They have plenty of room to grow that dividend, bringing in $3.20 of free cash flow per share. Now, their sales did take that big hit in 2020 with the theme parks shutting down and COVID throwing that monkey wrench into everything. But they're back at 12%. And they've been hanging around there the last few years, so that's pretty solid. I like seeing that. They've been buying back shares. They were at 5.43 billion shares outstanding in 2012, and they're currently down to 4.58 billion shares, and always want to see those total sales, money coming in the door, going up and to the right, currently bringing in $122 billion of top line revenue. Decent return on equity of 14% and return on invested capital, ROIC, of 10%. So their net debt is just a little bit high, but it has been coming down. It's at 50%, but it had been as high as 61% in 2018. So hopefully they will continue to keep paying that debt down. And their interest coverage ratio is only $5.38 of operating income to cover every $1 of interest expense. So I would like to see that a little bit higher. So that is definitely something that is to keep an eye on. So cable accounts for more than half of their value, but their content franchises and theme parks are helping Comcast to transition from traditional TV, and analysts expect modest growth with strong cash flows. But they do have about $96 billion in long-term debt, which could limit future opportunities, but much of the debt comes due many decades from now. And check this out, some of that debt stretches all the way out until November of 2063. So Comcast is about as cheap as it was in 2016. I love that dividend yield is 72% above the 5-year average, and that price to earnings ratio is currently 42% below the 5-year average. So consumer sentiment is shifting again. I think this is a really highly competitive industry. Now, CEO Brian Roberts, from what I read, is a superb leader of this company, and I would look for him to make a splash, is what the word on the street seems to be, that by 2024, end of 2024, they could purchase possibly Hulu, Paramount, or Warner Brothers Discovery. And of course, we know that cord cutting has continued to hurt their traditional TV business, but again, they are transitioning kind of away from that. But the thing that people are still going to need when they cut is internet. But you got to beware, because the telecoms like Verizon and AT&T are competitive in the space, and according to Fierce Wireless, Comcast is piggybacking off of Verizon's 5G network. Now, I plan to keep adding Comcast while it's down at these prices and really locking in that wonderful 3.5% dividend yield. But I really want to know, what do you think of Comcast? Do you own Comcast? Would you consider buying Comcast? Now, I know I said that Comcast probably isn't going to be a core position, but I recently, in this little box right next to my head, presented you with a tech dividend stock that I think can and should be a core position. So to find out what that was, click the little box we just talked about next to my head, and I will talk to you there.